Hey guys, this is Jay 6.4 again, and I was playing around with this whole Bitcoin explosion thing, and I just wanted to share this with you. And how would that compare to one of our trade automation robots? This is the one that we actually give away. And I wanted to go apples to apples, or at least as close as I could as far as results, if I were to visually backtest Bitcoin 5 years ago up to today, and of course one of our robots up to today. Now remember, we're always talking about probability and possibility, and I was just curious. If I would have invested $3,500 in January 2019, Bitcoin was $3,500. And you know, we all play the what if game. And then if I put that same $3,500 into one of our trade automation robots, one of these algorithms, some people call it AI, it doesn't matter. Where would that be today? So I'm going to go ahead and run this back test for the PDEA. And as I'm doing that, let's talk about Bitcoin a little bit. All right, let's go, and I'm going to start it, and we're going to look at the graph as it goes. Already down a little bit. Okay, so let's take a look at the Bitcoin. January 2019, we could have bought one Bitcoin for $3,500. Now, I'm in Bitcoin and I have Bitcoin, but I do not have a Bitcoin, because if I had a Bitcoin, no matter what I paid for it, it would be worth around $97,000 today. And today is November 21st. All right, so let's just take a look at this. Now, let's just play what if. We're going to look at possibilities and probabilities. Oh, where are we now? We're at $7,600 right now. Okay, and if I would have bought it then on November 21st, it would have been, my $3,500 would have been up to $57,000. Now, here's the question. Is this something I would have just added money to? Would I had dollar cost averaged in as it goes up? Would I just let it ride? Would I had just taken out my initial investment? People don't know unless they're experienced and they have a plan for their particular money. Me personally, I probably wouldn't have made it to $57,000. At the very least, I would have taken out my initial investment and reallocated it and diversified it in some way. So let's just say we're that person who says, damn man, I wish I would have invested $3,500, because I would have just bought and hold. Okay, let's just say you did that. So in November of 2021, it was $57,000, and then we saw a drastic drop. And I think this was, let's see what date that was. This was from November 21st all the way down. The drop was to a whole year of nothing but going down to November, December of 22. So then what would you have done? I mean, would you have just gotten out of it? Would you, if it went down to, let's see, went down to $16,000. So your $57,000 went down to $16,000, but yet you only paid $3,500. So what would you have done? Excuse me. All right. You know, I'm not going to edit, so this is just for that purpose. Now, 2 years later, almost 3 years later, November 21st to March 24th, we're up to $69,000. So now, if we did absolutely nothing, our $3,500 has climbed to $69,000. But then, of course, it took around, what, 6-7 months before it really broke out to $97,000. And I can't say that I knew, but I follow Katie Wood when it comes to Bitcoin type stuff, and she said that it was going to be $100,000 last year. Something happened, and I'm sure, I even told my buddies, yeah, I've got to go with Katie Wood. I'm not an expert on it, but I think it's going to hit $100,000. And as you can see, it probably will hit $100,000. All right, so we're going to see this PDEA What would that had done with the same $3,500? And what I did down here is I changed the settings to, uh, this is all relative, guys, a relative low risk setting, which is each trade that it made along this particular journey. You see this pullback here? Each trade that it made through this journey was around 1%, and it makes 4 trades at one time because it's 4 systems integrated into one robot, one trade automation robot. So each one of those trades were 0.25 of a percent, 0.25 of a percent, which again, put together, that's 1%. Now you see this, just like the Bitcoin, this is called, and I'm going to do another graphic on this, but this is what I call my DDR period. DDR is drawdown recovery. Drawdown recovery. Right here, drawdown, and this just drew down in the channel, recovery. And you see here, this is a drawdown recovery. And what I'm looking for with this back test, and a back test only shows you, again, this is what would have happened in the past, and here are the probabilities based on you just putting it in there, you're buying a hold. This is going through all news cycles. I'm not stopping it for anything. If there's spikes in the market, this should show all of that particular activity. So we're going to see what would my $3,500 be if I would have put this with the robot instead of Bitcoin. Wow, right now it's up to $178,000. And again, guys, there's a difference between possibility and probability. This is all, even when we see what Bitcoin has done, of course, there's a high probability that if you would have put $3,500 in, that it was going to be 97,000 as far as retroactively looking at everything, right? But what would you have done with all of this happening? What would you have done when it ran up? What was your plan if it backed off, if there were a drawdown? What would you have done if now you put money here, or you started investing here and you just saw this happen? What would you do? And I call that, everyone knows about ROI, but now we're talking about ROE. What's your return on emotion? Because this is an emotional roller coaster. Now, I do have a couple of YouTube gurus that I follow, that I like, that I resonate with their message. Now, they're more diversified than I am. So they're putting $100,000 here, there, everywhere. So they can actually take something like a $3,500 Bitcoin and add to it and hold on to it forever. But when you're starting with a smaller fund, you really have to think about, okay, when are you going to take out? When are you going to diversify? What's going to be your stop loss? So let's take a look at this. So according to this, the possibility is putting $3,500 here, and it's all the way up to about 160,000 as opposed to the 97. Let's take a look at the report. Here we have a drawdown of around 70% of our money. In other words, if we had $100,000 right here, someplace around here, it'll probably be worth $30,000. So that's a 70% drawdown, right? I don't know how people would have handled that. I don't know even how I would have handled that if I had $100,000 in Bitcoin at that time, okay? The maximum drawdown here, this is what I look at. The profit of that 30, well, it was less than 3,500. I had 3,450 there, and the total profit was 169,900. So let's just say $170,000 profit right there. This is the maximum drawdown, which was $68,000. Same thing here, relative drawdown 41%. So let's just say 40% drawdown. So if I had $100,000, it would have went down to $60,000 before I saw it recover. So the only thing that I'm saying is, yeah, I mean, I like that for Bitcoin, but the possibility of me now doubling my money in Bitcoin is probably lower than it is in taking the risk with some of these algorithms that we're using. So I'm going to go ahead and I'm going to make a mock-up of what in the hell is the drawdown recovery periods, and all of this is probabilities versus possibilities. Okay, again, this is the possibility. What I do in here and what the market does in here will be the probability. Guys, go out there and make some real money, and let's do it.